open today with oil markets on Brent at least a little bit down in Asia in early trade. We've seen that trend at the start of Monday and now again today, just a sort of a slight pause in the climb that we saw last week. The big momentum in oil prices from $82, $83 on Brent when the Saudi oil minister first started signaling output cuts in late August. And that, of course, climbed all the way up to close to $100 at the end of last week after the OPEC decision to cut quotas by 2 million barrels a day. And early in trade this week, it seems that rally is taking a pause. But what isn't taking a pause is the war in Ukraine and activities over the weekend and yesterday looking like it's heating up. Let's go to that part of the world and join Andre Belyi, professor, founder, and CEO of Balsan. Andre, your thoughts, just looking at the where we're at with the war now, 7 months, and the escalation over the weekend. Is this just another tit for tat, or is there something fundamentally shifting, do you think, in the scale of this war?
It is difficult to describe it, let's say, but it's definitely a process of escalation, as you rightly said. We don't have much of information of what's going on, but it's certainly a process of escalation, and visibly Russia decided to elevate, let's say, the pressure, but nobody understands what is the final purpose of it, because a part of angering up Ukraine and a part of increasing the Western support to Ukraine, they do not achieve much of the objectives with that. And it still remains, let's say, difficult to understand what are the effects of the war on Europe in general in terms of economics, energy, refugees, and so on.
Let's go to Kate Durian, Mies contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington. Kate, of course, we're still in the sort of fallout from the big OPEC plus shock decision last week to cut quotas by 2 million barrels a day. And now today we have on the back of this escalation in Ukraine, the UAE president going to Moscow. Of course, UAE and Russia both senior members of the OPEC plus community. What do you think the intersection point is here a few days after OPEC meeting for the UAE president to go to Moscow?
I mean, they've said very openly, the UAE said that they're remaining neutral in this war. They don't want to take sides. And I don't think that the president of the UAE is going to have much influence on Putin, because, Putin has this obsession with Ukraine. You've got this mobilization, which may not be what the headlines suggest. They're dragging people who are over 60, they've got old weapons. So it's not really, it's not really going to make, to beef up the Russian army, which is sort of not doing very well. So you've now got attacks on Ukraine. The problem is, should there be attacks on energy infrastructure, there's a fear that the gas pipeline through Ukraine may be damaged, or Putin may decide, as he has sort of hinted, that gas flow through Ukraine would maybe stopped, as it was through Nord Stream 2. So I think we spoke about this at the Fujairah conference that you held recently, that there is a lot of volatility, there's a lot of uncertainty, we don't know which way it's going. The OPEC cuts, I think, is not really that much, the headline is, and I think everybody's spoken about it, it's not going to be 2 million barrels a day, it's going to come from output quotas. A lot of members are not producing a quota, including Russia. So you're going to have a much smaller cut, maybe 1 million, and most analysts say it's probably going to be about 800,000. Of course, it'll be, if Iran comes back, if Venezuela sanctions are removed, which is at the moment, we don't know if that's going to happen, then of course, these countries that are excluded from quotas can increase production. But you also have a lot of instability in Libya. You've got threats by the Houthis in Yemen against UAE and Saudi infrastructure, and they have targeted energy infrastructure. So I think, we're in a period of volatility. Oil prices are down because the dollar is so strong. You've got higher interest rates. You've got China lockdown. So, all these factors are making for a very, very dislocated and fragile market.
Well, let's go to China with Victor Yang, senior editor at the JLC Network Technology. Victor, of course, this is a very big week in China in the run up to the the Communist Party Congress, where we expect President Xi to be renewed in his role as leader of China. Your thoughts with the outlook for China? Can we expect that once this Congress is over, that China's economy will open up a little bit more?
Well, there was a report on official report media called People's Daily yesterday, which is titled "Why the Dynamic Zero Policy is Sustainable and Why it Should Be Continued with," explaining this policy is sustainable and the necessity to carry on with this because explain that if we open it up, there will be more serious consequence to the economy than what is now, saying that it's the best way to balance economic development and health. So we are not going to see an opening up yet. Yes.
Victor, I saw an interview the other day with a very senior medical officer in China who acknowledged in that interview, I believe it was with BBC or CNN, but nonetheless, he acknowledged that the Chinese vaccine are not as strong as they would like them to be. I'm wondering, why does China not subscribe to the Pfizer or those other vaccinations that have proven so successful in other parts of the world, when clearly that would help a lot in China? Why is that not an acceptable path?
But first of all, let me ask you a question. You take Western media very seriously, and you think what they say is true. Say, let's suppose if other vaccines are so effective, why do they have so many infections? I'm just wondering about this question too. And when they reported the effectiveness of their vaccine and they report about China's vaccine, they're always talking from their point of view and from their propaganda. So I serious doubt about the effectiveness, what they're talking about. Yes.
Well, we do have a situation where the rest of the world is getting on with life and China is in lockdown. I don't know, whatever you want to interpret that vaccine to be good or bad, but that seems to be the case at the moment. Andre, I wanted to talk a little bit about the situation. Obviously, we've got the ongoing conflict in the Ukraine, and I would have bet my house that the markets would have opened Monday morning moving higher on the back of the bombing of the Crimea bridge. And of course, the OPEC cut being a part of that wind is in the sails of the oil price. But the opposite has happened. I'm wondering, from your perspective, are we now in a period where the oil markets have sort of baked in the war in Ukraine and that it's not really a factor anymore to keep this market propped up? What are your thoughts?
Well, we see that actually oil markets kind of relaxed over the latest week, and that basically a number of drivers which drove there, including quite strong dollar, and the dollar strength usually leads the oil price to relax. So far, the development of Ukraine situation of the war between Russia and Ukraine does not impact much the global oil markets. I guess that most of the global actors markets are used to what's going on. You also remember that in March, both oil and gold skyrocketed. And paradoxically, dollar also increased compared to competing currencies. So that was kind of like abnormal situation, mostly because of the fears related to the war. Now it's not the case anymore. So the global economy doesn't react to what's going on between Russia and Ukraine, even when there are some discussions about possible nuclear threats or about possible direct intervention of the Western powers into this conflict. However, we may expect that changes in the oil markets might occur in December, when the embargo against Russian oil crude and oil products will be effective in the European Union. And there definitely we may have effects, just we shall not predict those effects.
In that regard, though, Dr. Ali, it does appear that, I mean, from a market perspective, of course, the December 5th is only a few weeks away now, and this market doesn't seem to be stressed out about that December 5th deadline, in the sense of it being a major disruption to global oil flows. Yes, the Europeans may stop taking seaborne oil, but that oil will ultimately get to market. It would seem to be that is the message in the oil price. Your thoughts on that the Russian oil will find a market somewhere. It won't be locked in the ground.
Well, there are both truths are there, let's say like this. On one hand, it's true that part of Russian oil will flow to China and to India. On another hand, a part of Russian oil is still transshipped in European ports in Greece and in Estonia. And once these countries increase the level of sanctions, then definitely Russian companies will run into trouble. Also, we don't know what's going on with the Russian oil sector. Everything is now classified by Moscow. So we don't have any information, any official information. And why did they classify it? It's because things are not going well. Because if things went well, they wouldn't be in the need to classify the information. So there are a lot of troubles within the Russian oil sector. And but it doesn't mean that the Western embargo will take an immediate effect either.
Kate, there's a report in our digest today. I just wanted to, I mean, this is the sort of the debate at the moment, which is, yes, OPEC Plus announced a 2 million barrel a day quota cut. And of course, as you pointed out in your earlier comment, OPEC Plus is already producing at 3 million barrels a day below their quota. So 2 million sort of brings it into a fictional space. And the question then becomes, well, how many barrels physically will be removed from the market? And I suppose with a declining oil price over the last 2 days, there's some sense in the market that, well, the actual physical barrels that will be removed won't be as substantial to warrant a lot of stress in the oil market. And we have a report in our digest today from Iraq Prime Minister candidate saying they can't afford to cut supply. We had another story yesterday by ADNOC announcing that a contract of nearly $2 billion for offshore drilling contract that they awarded. It doesn't, I mean, clearly there's a lot of capacity expansion going on in the region. What's your own expectation on that sort of cut versus this growth in capacity that we're seeing in the Gulf?
Well, I mean, if you look at Iraq, for example, they do have capacity, but they can't export more than they're currently exporting because the state of their terminals is so bad that you could have leaks. We've had one recently. So I think Iraq, and again, the Sudani, who is the prime minister candidate, is not really in power at the moment, so he can speak his mind. But officially they've supported it. But in Iraq's case, they can't really produce much more than they're producing at the moment because they don't have storage either. So that's an issue. But I think with the UAE, yes, I mean, these are plans to go up to 5 million barrels a day by 2030. They've been in place. And, the UAE does deliver, when they say they're going to do something and they set a target, they usually deliver, on target. So I think, the main issue is there is still a lot of uncertainty. And if you talk about prices coming down, they went up to 97, above 97, they're back down again. But much will depend on, I think it's demand at the moment. It's going to be driven by demand. And that's where we will see whether the market's going to be balanced, if you're going to have more demand destruction, which we've already seen. Once the sanctions come into effect, if they're accompanied by this price cap that nobody really understands how it's going to work, whether it's going to work, whether Putin's going to agree. While in Fujairah, I heard from a trader that India, which has been a big buyer of Russian crude, was actually trying to get more out of Iran, because now there's competition. Iran is going to have to discount its oil if it wants, to maintain its share of the Asian market, which is where the sanctioned oil is going anyway. So I think there's a lot at play at the moment, and Russia can only send that much of non-seaborne crude to Asia. And the Asians are becoming quite price sensitive. So I think it's going to be hard. You look at Saudi Arabia in your digest, they are, fulfilling all their commitments, both to Europe and to Asia. So that's not coming down, even though prices are, official Saudi prices are definitely not competitive with discounted Russian crude. But when it comes to Russia, I think if they cannot export the oil, they are going to suffer if they have to shut down. It's going to be very difficult. And I was listening to a podcast with Dan Jurgen this morning. He was saying, Russia will no longer be the energy powerhouse that it used to be, even when this conflict is over.
Victor, obviously China is going into the fourth quarter. We've had announcements of a significant increase in export quotas. Your thoughts on when they will sort of move to market, and where will it come? Will that be a drawdown of inventories? How do you see it impacting Chinese oil imports as well as products exports?
Yes, we are going to see larger exports from October. I mean, larger compared to previous months, not to previous years. Say for instance, diesel exports in the first 8 months plunged by about 80% year on year. So have been quite low earlier this year. And the last quarter will bounce back quite significantly. But on the whole, for the whole year, the exports will still be slightly down from last year, probably. And this is not a change to the government's policy. It's just temporary because of too many challenges to its economy. And the government is now trying to give a bigger boost to its economy in the last quarter of the year, because domestic demand is not recovering much yet. Say, for instance, in September, which is a traditional strong season for diesel demand. Diesel demand didn't grow last month. Say, just largely stable. And our data just came out 2 days ago. So it's quite different from previous years. And when these exports grow, could the country's crude imports, are not expected to grow much because they have quite high inventories, say, not just crude inventory, but also oil product inventories at a lot of refineries. And in early October, the country also granted, say, about 20 independents the first batch of 2023 quota much earlier than usual. So usually the government gives this release this quota at the end of December, say at the end of December 2022 for 2023, the first batch for 2023, but it's much earlier this year, just in case that independents might need extra quota. So, but it doesn't mean they will necessarily use this quota in the last quarter of the year. Yes.
And given that this typically is a big demand period for China oil imports, you know, coming up to the Chinese New Year at the end of January, what is your expectation for crude oil imports in the fourth quarter? Will they be below 10 million barrels a day, or will they climb for this seasonal demand?
Yes, we expect it to climb modestly from the previous quarter, but it wouldn't be back to the pre-pandemic level yet. And two large refineries are coming online. Say one is still in trial production, say Shenhong Refinery, that's a private one. And the other one is PetroChina's Guangdong Petrochemical, 400,000 barrels per day, is coming online in October, but it's not consuming much oil yet this year. It will boost consumption next year. So this will give the consumption kind of stimulus. And the larger exports in the last quarter will surely give some support to its demand to not too much, yes.
Let's go to the survey question and get everybody's view on this, where the baked in oil price, if you like, is the Russia's war in Ukraine is already in the oil markets and will have little influence on the direction of oil price over the fourth quarter. Do you agree or disagree with that statement? All things being equal, I suppose the war goes on a bit way this way, a bit way that way, but ultimately it's baked in the price that will have little influence on the direction of oil price in the fourth quarter. Andrea, what will have influence on the war will have influence, it seems, is on stability in Europe. We're seeing strikes in France. We're seeing divisions in German politics. Of course, the new prime minister just came into office in the UK, and right-wing government coming into Italy. I'm just wondering, from your point of view, how Europe stress is holding up as winter starts to come and the bite of this inflation and energy security crisis kicks in.
Well, not all the difficulties that exist in Europe now, or changes that actually appeared in Europe, are related to the war. For example, you mentioned Italy, right, where you have the right-wing politicians who came to power, and indeed, very much their success was driven by a number of failures in economic policies which preceded the war. And paradoxically or not, the new government is not planning to be friendly to Russia. They are planning to be more rational in their understanding of sanctions. But you notice that yesterday, Italian government increased, at least semantically, at least in discourse, their support to Ukraine. That was one of the most vocal voices. I also do not see major political change which would come in France or in Germany. So I would say that most of the largest part of the European political world will keep supporting Ukraine. For a very simple reason, because the war is not only about Ukraine. And Moscow states it quite explicitly that it's not about Ukraine. And therefore, of course, there is a natural reaction to create countervailing measures. Regarding the energy crisis, indeed, the major issue is the gas price, which will skyrocket. At the same time, we observe a very strong decline in demand compared to the last year. And that counterbalances the effect of the gas price because the fuel switch to other fuels, including coal and liquid petroleum products, basically help the situation out.
The other point that may be also supportive for that European Union position and the new Italian right-wing government staying strong with the European Union position was the decision yesterday by Germany to support the joint issuance of European Union debt to cushion the blow of the energy crisis, which the Germans have since a long time held opposition to that position of a sort of consolidated debt. Italy will be very happy to hear that. Do you think that's an important step by the Germans, Andrei?
It's a game changer. It's a game changer because we all understand that the old monetary rules and debt rules that existed in Europe will not work, at least this year and probably next year.
Okay. Kate, you and your colleagues at the Arab Gulf States Institute in Washington are having your annual meeting in Washington this week, which is quite serendipitous timing, I would say, given what's happened. I mean, we started our conversation saying the UAE president was in Moscow, but last week, of course, the Russian deputy prime minister and senior politician that oversees Russian energy was in Vienna with the OPEC Plus group. The optics here are quite strongly against the image that Washington would probably like to see. I'm just wondering how your meeting is going to tackle some of these issues. What's on the agenda?
Well, we're actually going to be having it next week, but yes, I mean, it's basically talking about the dash, the dash for gas, crude oil demand, suddenly back up again. And the hydrogen economy, that's building, and particularly in the Gulf states, because that's our focus. So I think what we're seeing at the moment is a shift from sort of this drive for energy transition to actually affordability and availability, which is what I think we've been talking about. The switch to other sources of energy that are not as expensive. Coal, for example. I heard today that the additional consumption, and Victor can correct me, that the additional consumption of coal in China is more than the entire coal consumption in the rest of the world, which is quite huge. So I think, one of the, I suppose, as the war drags on, and I disagree that the price is actually reflective, it's baked into the oil price, the war in Ukraine, because at the moment, I would have said so a week ago, but now that it's intensified, we don't know which way it's going to go. We heard reports that there are troops, moving back to Belarus, how that's going to change the equation, what's going to happen next. So I think it's going to be very difficult, but that's what we're actually going to be looking at is basically, for me, it's the Gulf states now in the driving seat. And you talk about,
but on that point,
Novak. Novak, Russia.
The Arab Gulf States Institute is a think tank that does position the Gulf sort of profile in Washington. That will be a harder pitch to advance at the moment.
I know. Well, they are at the forefront of energy security. But again, the US reaction to the OPEC quota cut was quite harsh. We don't know what Washington's going to do, if they're going to do anything. What action they're going to take. Is the NOPEC, as somebody called it, the nuclear option, going to be now back on the agenda? Whether it passes, I mean, it's been going on for years. They've been talking about it, but now I think there seems to be. I think what happened was it's not so much the headline number. I think it was the optics, as you say. Before he died, Mohammed Barkindo, the former Secretary General, said to me, he was in Washington, and he was told. He said, I was told it doesn't look good for you to be seated at the table with Novak, with the Russians. But of course, he's not the main decision maker. All decisions by OPEC Plus are consensus decisions. So obviously Russia was on board. And that, I think, is something that's very important to Saudi Arabia, to the rest of OPEC, to sort of maintain that alliance that has benefited all of them.
Well, it's certainly a conversation to keep watching, and it'll be quite interesting to see how that is, the flavor of that in Washington next week, particularly in the interim, if there is some kind of reaction to the OPEC Plus decision. Victor, let's give the last word to you this morning with the survey result. And the agree that, at least in this room, that the Russian war in Ukraine is baked in already and have little influence on the price in the fourth quarter. Victor, what could have a great influence into the new year, of course, is where does China go in terms of its oil demand and its appetite to reopen its economy. As we look to 2023, 22 and 21 were down years in oil imports and also down years in economic growth. Obviously, still positive growth in China, but the growth number is falling. Yes. What's your outlook, do you think, for 2023 at this point, now that when we're literally trading the end of the year on oil and we'll soon be trading January contracts?
Well, first of all, we will still be looking at the policy, first of all. And when I talk about policy, I mean, first of all, it's about the virus-related restriction. And there are divergent opinions about this. Some saying that these restrictions had dampened economic growth, but some official explanations show that actually it tries to strike a balance between economic growth and health. Say, just recently, and the official reports had explained more than before, perhaps because there's some complaints about this policy. Yes, there are different opinions about this too in China, even in China. Yes, that's for sure. And so first of all, we are looking at how the virus will develop, and we hope it can become more and more like an average flu, and the country can ease its restriction, say at least not as strict as this year. So that's one hope. And next, the government is still pushing forward with the industry upgrade, and it slowed down a little bit towards the end of this year because of too many challenges to the economy. But it will continue next year, say, for the green transition. And this, say, a lot of new energy is now replacing oil. And this trend will continue and even speed up next year. So we are not going to see a surge in oil demand like in the past few years. And we can just see a moderate increase.
Even if the economy opens up, you're saying?
Yes.
Yeah, it's important to always be reminded that the energy transition in China remains quite on target, and the commitment remains very substantial. Even though we're seeing coal make a recovery, there's still that commitment. Well, we have to wrap it up there. Dr. Andre, thank you so much for joining us again. Victor, as always, from China, and Kate Durian, thank you very much.
I hope to make some comments about what I say about Western media. Excuse me. I didn't mean it personal. I just wanted to say, when Western media report China, they tend to be biased. And I had hardly found any positive reports about China from Western media. I didn't mean it personal.
Of course. Yeah. Of course, the Western media is biased on many things, and the Chinese media is biased on many things.
Yeah.
That's media.
And the Russian media is biased.
All media has its bias. You have to consume it with the intelligence and realization, and not to take anything for literal granted. Thank you so much, and we'll catch up every morning, 10:30 UAE time. All the best.
Yes.